Sellers took the lead in the oil market. Traders have enough grounds for opening both short-term sales and long-term ones. Global oil prices started the new week with a decline. Oil prices suffered their first weekly loss since April 24th. Brent fell by 8.4%, while WTI dropped by 8.3%. In addition to a weak recovery in oil demand, traders are focusing on the risks of a second wave of the coronavirus spread. Markets are concerned about the epidemiological situation in the US and China, where there is an alarming increase in the number of infected people. Although the long-term forecast for oil growth remains unchanged, the coming months seem to be difficult in terms of purchases. The number of speculative positions is declining due to the coronavirus outbreak in the US. At the same time, in early June, the net volume of long positions reached its highest level in 2 years. According to CME Group, the indicator showing open interest in oil futures decreased by almost 20,000 contracts. The trading volume began to come down. The total number of futures contracts dropped by about 315,500. On Monday, Brent crude futures for August lost more than 1% from Friday's closing price. At midday, the North Sea crude was trading at $38.20 per barrel. WTI crude oil futures for July turned negative as well. The rate of decline of the US crude oil turned out to be more substantial. Losses amounted to more than 2%. At midday, WTI crude was trading at $35.40 per barrel. Prices are going down, but they are unlikely to repeat their tumble demonstrated in early March. Apparently, the peak of the global pandemic has been passed. Energy demand is still 50 to 20% below pre-crisis levels, but economists predict a recovery in demand. At the same time, fears of a second wave of the coronavirus outbreak may affect the cost of Brent futures contracts, dragging it below $35. This week, the Bank of Russia is set to make a decision on interest rates and give some clues about the future of its monetary policy. Traders expect the bank to cut its rate by 100 basis points, and they open deals based on these expectations. Therefore, the ruble will become more dependent on sentiment in the external markets. The dollar-ruble pair is moving in a positive territory, while the US currency is extending slight gains. At midday, the greenback was trading at 70 rubles 30 kopecks. If the dollar-ruble pair continues to correct in the European and American trading sessions, it is likely to test the mark of 71. The ruble is currently trading under pressure from other weaker currencies in the emerging markets due to the fears of a second wave of coronavirus. The Bank of Russia's foreign currency sales are expected to mitigate the negative impact of the external background. You've watched Daily Financial News on InstaTV. See you back soon.